Hello and welcome to our weekly Forex roundup. The key issue for the currencies remains a question of momentum and whether the landing in certain currency pairings, particularly the dollar, is hard or soft. A landing or reversal that will be driven by relatively faster interest rate rises due to cost push inflation in the near term, but eventual economic recovery in the longer term. The problem is that the answer and timings of these reversals still largely lies with exogenous shocks such as Middle Eastern instability and commodity prices and the devastating impact of earthquakes in Japan and New Zealand. These still have the ability to force a hard landing in some cases and still have the ability to produce a repeat flash crash correction in the stock markets. So possibly an unusual starting point is Euro Swiss, which still carries an associated threat of a sharp but short-lived spike to new lows. The dollar Swiss threat, therefore, of a February 2008 style blowout as opposed to our favoured soft wedge landing. Either way, in stark contrast, the strong probability that the euro has finally topped at 140.30 and that cable has survived below our key 164.15 resistance for new downtrends. While despite short-term volatility, dollar yen remains in the 1980 style prolonged 80 to 84 consolidation. Anyone who's followed our Canadian bubble analogy will know that we think the bubble has finally burst and that the issue is whether the reversal will address the huge momentum loss with an aggressive rally or repeat the bubble analogy in reverse. The Aussie, however, is not ready to reverse as it remains in a rising wedge, similar to that in February 2008, uncannily the same time as the previous dollar Swiss blowout. Given this lack of a uniform reversal, there are exciting cross plays. Euro-yen remains close to a major top, but a possible wedge could fool the market with 117 first. Euro-sterling's diamond formation will very soon resolve whether it's a trend continuation or trend reversal pattern, and whether it needs a final spike lower or the longer-term uptrend has resumed. And indeed, it will probably also determine whether sterling yen's bearish correction will be in time or distance. To get a better idea of how all this should pan out this week, follow us on www.marketvisiontv.com or me, Ed Matz, on Twitter. Good luck, and of course, have a great week.